Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to my video today, and please don't forget whilst you're here to like this video and please subscribe to my channel. That will be awesome. Thanks guys. So in today's video, I'm going to be talking about what happened in the markets last week. And again, it was an eventful one. And I'm also going to be talking about how our portfolio fared overall and our overall strategy. So to get things started, last week was a difficult week overall for the stock market and many different asset classes. And the S&P 500 was down about 1.3% for the week, whereas the Nasdaq was down a whopping 3.9% for the week. So it was a very difficult week overall for technology stocks. Our portfolio performed at about minus 3.7. So it did slightly better than the Nasdaq 100, but underperformed slightly the S&P 500. And I guess the main theme of last week was technology stocks performed pretty badly. Also, it was a very tough week in terms of crypto, including Bitcoin and some many different altcoins. And the Chinese market also suffered as well, considering that there's a lot of lockdowns in China because of COVID-19. So this all put pressure on the portfolio. However, I did manage to stem some of those losses by doing a lot of different hedging techniques and also short-term trading. As you'll be able to see from my history on my eToro account, last week I did a multiple amount of trades in stocks, indices, commodities in all different areas, and I managed to have a very successful week in trading last week. Sometimes there might be the odd loss that I may have when doing the trading, but my key ambition is to try and get a high success rate as possible. I'm looking at about 90 to 95% success rate and doing those very frequently in order to get more profits and in order to hedge the market when we have some difficult times like last week. As we move on to the global weekly market updates, and I'm going to start off with the US. And last week, the US major indices were down for the week, and that was down to a number of different factors. So obviously the Russian and Ukraine conflict is continuing to rage on, as well as there was some sentiment that was coming out of the Federal Reserve last week, in which Lael Brainard, who's usually a very dovish policy maker in the Federal Reserve, who said that the Federal Reserve were going to look to reduce their balance sheet as much as possible and were going to be quite aggressive. Also said that they could raise the interest rates by up to 0.5% in the next meeting, which takes place in May. So there was a lot of kind of negative or dampened sentiment in terms of what might happen in terms of interest rate hikes and those balance sheets reduction, which really brings on a risk off attitude. And what this caused was the technology stocks to particularly sell off last week, and the sectors that tend to do better last week was the consumer staples, as well as some other defensive types of stocks. So they performed generally better in our portfolio last week. We also saw a dip in oil to about $95 last week. And the main reason why I think that is happening is because there has been an increased cases of COVID-19 throughout the world, but especially in China, which has caused a lesser amount of oil demand. I still expect oil to kind of fluctuate between kind of $90 to $110 over the next couple of months, especially as the Ukraine and Russia conflict continues to rage on. But I think once there is a resolution in the conflict between the two countries, I think that oil price will start to come down to a more natural level. We also saw some data released from the US, which said that the jobless claims had gone to the lowest level that they had since 1968, which shows a really robust employment market out there, despite those inflationary pressures and also the pressures of increasing salary costs for workers. So this shows that there is a lot of demand still in the market in terms of goods and services. However, we did see the post-due auto loans go to the highest level since April 2020. And this indicates kind of two things. One, obviously, the cost of vehicles have gone up as we've had those supply chain issues and a lack of supply of cars and autos. And also we may start to be seeing a little bit of a crunch to people's wallets as the increased cost of inflation is starting to mount up and it's becoming much more difficult for them to service those debts. So let's now move on to Europe. And last week, the European indices were generally quite mixed, and the German index as well as the French index were quite down last week. However, the UK index was modestly up last week. So what happened then in the European markets last week? Well, if we look at France in particular, we saw that the far right candidate Marine Le Pen is starting to gain ground on Emmanuel Macron. And this is seen as quite negative overall in the stock market in France because she is a divisive figure and also is expected to have an effect on the economy. However, let's see how the next couple of days pan out and how those polls continue to progress. We also saw the EU continue to mount pressure on Russia last week as it included more sanctions. So one of the sanctions that they have implemented is the ban of exports of Russian coal as well as Russian machinery. There was also additional personal sanctions placed on the two adult daughters of Vladimir Putin as they continue to twist the knot. We also saw the UK Prime Minister Boris Johnson. He went to Kiev last week, in which he met with the Ukrainian President 𝗳𝗃𝗃, in which he pledged another £384 million worth of support to Ukraine in order to help them with weapons and other supplies that they need for the war. So that was a very good meeting between the two parties, and it shows that continual support from the UK and also other EU nations to support the efforts in Ukraine. We also saw the UK continue to be ravaged by COVID-19 as there's a continued increase in the number of cases of Omicron in the country. And this has caused a lot of staff shortages in many key different sectors. And we even saw lots of delays in terms of airlines last week for travel. And I think that this is going to continue to have an effect on the UK economy, especially over the next couple of weeks. We also saw the minutes released of the European Central Bank meeting that was set in March. And in those minutes, it really said that the ECB is going to continue to try to fight inflation as well as possible. And it is now time to go to a more normalized monetary policy, which signals that the interest rates are likely to increase and there is going to be a lot less stimulus overall in the European economy. And we did see some data from Germany, which said that in March, the factory orders for Germany had decreased significantly from the previous month. And this was put due to the fact that foreign orders had decreased overall for the month. So this is showing a slowdown in manufacturing in Europe, but especially in Germany. So it's something to keep an eye out for over the next couple of months to see if that does improve, if we have an improvement in COVID-19. So now let's move on to China. And last week, the Chinese markets were quite heavily down. And again, this is put down to an increased number of COVID-19 cases throughout the country. And it has been said that over 23 different cities are either in partial lockdown or in full lockdown, and over 193 million people are affected so far from these partial or full lockdowns. We also saw a two-stage lockdown in terms of Shanghai, which is one of the biggest cities in China. And as we can see, this is seriously affecting the economy at the moment in China, especially as they have a zero tolerance policy in terms of COVID-19. And the Chinese government is very quick to put in these lockdowns or partial lockdowns when they feel it is required to stop the spread of COVID-19. So it'll be interesting to see how that develops over the next couple of weeks and whether these cities can start to slowly come out of those lockdowns. We also saw data from China which said that the PMI, which is the Purchasing Managers Index, had actually reduced quite significantly from 52 to 48 last month. And that shows a slowdown overall in manufacturing and the services sector in China. And a figure below 50 usually shows a contraction in terms of the activity. So it's be interesting to see again whether that is just a short-term statistic that's coming out at the moment because of those lockdowns, or whether it's part of a broader trend of a slowdown in China. There's also been some good progress this week in terms of the Chinese regulatory environment. And as I've been mentioning over the last few weeks, that there has been a lot of tension around the Chinese companies that are listed in the US on the US stock markets, and that the requirement of the SEC is that they be audited by third parties to check the financial results. And this had been opposed by the Chinese government because they didn't want to let out national secrets, or they didn't want to let out sensitive national information to the US. However, there has been some progress over the last couple of weeks, and it has actually been said that last week that the Chinese regulators are going to drop the requirement that it has to be a Chinese regulatory agency that does the on-site inspections of these companies, and they are going to allow more third-party auditors to be able to do this. So this is seen as very positive, and again it makes the likelihood of those ADRs in the US or for Chinese companies are much less likely to be removed from US exchanges, as they are starting to play ball with US regulators. However, there have been some continued tensions recently regarding the US and also China. And the main reason for this is that the US are quite angry that China hasn't condemned the actions of the Russians in terms of Ukraine. However, we do know that the Russians and the Chinese have a very close relationship, and it was always very unlikely that they were going to condemn the actions of Russia. However, the US did say quite strongly last week that if China was to interfere more in the Ukraine conflict and was to provide support such as ammunition to the Russian army, then they were quite likely to be faced with more sanctions. So this was really more of a warning shot to the Chinese government that they do not want to support. And it's much more likely that they are going to take a more neutral stance in order to stay away from it and not affect the economic implications. So as we move on to the top 3 performing stocks of last week, and the top performing stock of last week was GlaxoSmithKline, and that's not too surprising, as the pharmaceutical and the healthcare sector experienced some quite good gains last week. So GlaxoSmithKline was up about 7.36% for last week. And the second best performing stock in our portfolio last week was Everbridge. And as we know, Everbridge has suffered quite significantly over the last couple of months. And mainly the reason was that the CEO left the company, and he was quite a high, revered and distinguished CEO who was doing a very good job in terms of managing the company. And this caused some uncertainty throughout the company. And also there has been some decreases in the price of technology stocks as we've gone to a more kind of risk-off environment. However, we did see a good comeback last week from Everbridge, and it was up about 7% for last week. The third best performing stock in our portfolio last week was Cigna, and Cigna was up about 4.8% for the week. And generally, insurance companies tend to do well in environments where there is increased expectations of higher interest rates. And that has been no different for Cigna. And it has been a very good year to date so far. And I expect more upside potential from Cigna throughout 2022. So let's talk about crypto now. And last week, the crypto markets, it was a very tough conditions, and Bitcoin was down over about 8% for last week. And again, we're coming in much more into a risk off environment, and we have seen technology stocks decrease over the last week or so due to these expectations of higher interest rates and also the reduction of the balance sheet. And this has kind of spilled over to crypto, which is generally a risk on type of asset. So that caused a decrease in the price by 7.9% last week, and we are kind of hovering around that 42,000 area at the moment. And although it is possible that Bitcoin could break below that $40,000 mark, I think it's very unlikely that it would break below the 36,000 mark, as there is a lot of resistance there. And I'm also much more bullish even on crypto than I was just a few months ago. And the reason why is there is a lot of buying pressure from the Terra Foundation. They are buying a huge amount of Bitcoin every single day. And as we know, the supply of Bitcoin is a finite amount. And so it's quite likely that the price of Bitcoin is going to continue to rise. And we're also seeing a lot of different buys from MicroStrategy and Michael Saylor as they continue to increase their conviction in the asset class. And again, we saw them buy another $90 million worth of Bitcoin last week to add to the already hefty reserve of Bitcoin that they have. So I am very bullish still on Bitcoin, but we could see Bitcoin dragged a little bit into this risk-off environment that we are seeing because of what's happening in the stock market. Last week, we also saw the Bitcoin Miami conference, which is held every year, which focuses specifically on Bitcoin. And there were a couple of announcements at that conference. And one of the big announcements was that Block, also previously known as Square, and also Blockstream are going to be partnering together to come up with a new crypto mining facility that is going to run on renewable and solar power. And they're going to be doing this powered by Tesla solar equipment. So this is very bullish for the market overall, because not only is there going to be more mining that is carried out, we're also seeing a more of a move over to renewable energy sources. So it is becoming less likely over time that Bitcoin is going to continue to be painted with that brush of being environmentally unfriendly, because more and more Bitcoin mining is being done with renewable energy sources. Also saw another announcement from Jack Mallers, who is the CEO of Strike. And what they announced is that they plan to have lots of partnerships with lots of e-commerce giants, as well as payment processors, in order to be able to allow people to be able to buy normal goods and services using Bitcoin, but specifically on the Lightning Network, in order to be able to speed up those transactions and make those a lot cheaper. This is very bullish for the crypto market overall. And I actually think that this news has actually been underestimated by the media, because it doesn't have that sexy narrative that it had last year in terms of El Salvador becoming the first country in order to have Bitcoin as legal tender. But don't be surprised that this is actually a really big development, and I think it's going to be more and more appreciated over time, because the more that people are using Bitcoin as a as a form of legal tender as well, it's going to be much better overall for the markets, and it's going to lead to more mainstream adoption. It was also announced last week that Robinhood had created a crypto wallet in which is going to allow over 2 million of the worldwide users to be able to have access to that crypto wallet, which is a good stage in terms of development for Robinhood, and it's going to make sure that people are a lot more crypto native in terms of being able to manage their own private keys and to be able to move the crypto assets on and off exchanges. So I think that this is very good overall for the crypto ecosystem, as there is a lot of kind of newer and more mainstream users using Robinhood. We also saw the 𝗃𝗶𝗱𝗲 Foundation, which is part of the Hashgraph protocol, in which they announced that they are going to set up a $250 million metaverse fund, in which they're going to help to support metaverse projects overall on the 𝗃𝗶𝗱 protocol. Last week, we also saw our very own eToro actually create a $20 million NFT creators fund. And over the last couple of months, we've seen eToro have more and more interest in NFTs, and it'll be really interesting to see how that progresses and how they can turn it into a real business model for eToro. In addition to doing lots of short-term trades last week, I also closed my position in Budgen. And Budgen is a distributor of a variety of different types of products, but it has a strong footprint in terms of COVID-19 products such as sanitizers, also cleaning equipment, and some other areas as well. And I felt like it was a good time to close this position, in which I opened up about a year ago, and I made a very good profit with multiple positions between 30% to 40%. So I thought that this was a good time to close out that position, and I can now look to put that profits into other undervalued stock plays. Thanks very much for listening to my video today, and I appreciate all your patience over the last few months. I know it's been very difficult start to 2022, and it's been a tough market environment overall, but I really thank you for your patience. I continue to battle the markets as well as I can. I will continue with those short-term trades, and I will continue with those hedges, but I will also make sure that I am set up for future growth in our different asset classes when the time arises. So I am still very bullish, especially for the second half of 2022. So it's important that you keep patience, not only in the stock market, but also have conviction in my strategy and my selection of asset classes and stocks. And as usual, please don't hesitate to join our Discord group. We have really awesome discussions every single day on the group, and we are always asking questions, and we are having the community contribute together. So thanks very much, the Bees community, for joining in that discussion, and have a great week ahead.